Welcome to SpendLogic. This short tutorial will show you the basic steps you need to know to write a published price list analysis report. This report type would be used if you didn't compete and can't use historical prices as a basis for your analysis. Also, in order to use a published price list, you need to have received a price list from your supplier as well as documentation showing prices other customers have paid, such as redacted invoices. If you don't have one or both of these items, then this may not be the right method to use. For step-by-step guidance on other price analysis methods, please see our other video tutorials available at spendlogic.com/help. Before watching the rest of this video, you want to make sure that you are already familiar with how to create a new report, which is covered in a separate video, because we pick up here where that tutorial left off. Let's get started. Here we have a purchase order with multiple parts. We know it's a purchase order because of our header, which shows PO and does not have a Return to PO button. I'm going to click Edit next to the part that indicates Publish Price List in the Type column. This opens the Proposed Price Details screen. Again, we know we're in a parts report because our header has a price analysis method as well as a red Return to PO button. This is the second step in the left-hand navigation. The first step, Procurement Details, was automatically filled in when the PO was created. Therefore, SpendLogic skips over it now. The purpose of this screen is to enter details related to the proposed price. Your part number will already be visible since you entered it on the PO Procurement Details screen. However, if you decide that you want to change the part number, this is a good time to do it. This is particularly helpful if you want to copy a report that uses a different part number. We cover that in another video. For now, there's no need to change it. Clicking the input box for current delivery date allows you to type in a date using the month, day, year format. To eliminate the possibility of formatting errors, click the calendar icon to bring up a date chooser. The date you enter in this box should refer to the midpoint of deliveries. This is used for escalation purposes in a later step. If you have only one delivery date, that's what should be entered here. Current quantity and proposed price per unit refer to the quantity and price that were proposed by the supplier. Be sure to enter only the recurring price in price per unit. If your procurement has non-recurring, it needs to be broken out of the per unit price. The purpose of this is to ensure that the system maintains its accuracy. When you're done with this page, click Next. The Published Price List Details screen is where we upload the price list provided in support of the proposed price. To do this, simply click Add Files. To do this, simply click the Add Files button and follow the instructions on the screen. The published price list will now be included in the final report download file. The next question relates to terms and conditions. The point of this question is to ensure that there are no material differences in terms and conditions between the current procurement and the supporting documentation that you're providing showing the prices that others have paid. Clicking No brings up an additional text box that requires an explanation of how the terms and conditions are different. If the differences are significant, you can adjust the price in the complexity screen here in a few steps. In this example, I'll click Yes. When you've answered all the questions on this screen, click Next. In order to use published price lists as a basis for reasonableness, it's required that we show the published price list represents prices that others have paid. There are several ways to do this. The first is to provide an invoice, redacted or non-redacted, showing the price that others have paid. The second is to show that this item is purchased directly from a catalog or website at the price shown. If you have other methods by which you have determined the published price reasonable, you can choose Other. Regardless of which of these you choose, SpendLogic will require that you input the customer or source name, invoice or catalog number, invoice or catalog date, and a scanned copy of the supporting document. Scrolling further down, you're required to input the quantity of either the invoice or catalog, price per unit, and the delivery date. Each of these elements is used in later steps to correct for escalation, quantity, and complexity. You'll see a question regarding whether or not it's customary to receive rebates on this item. Think of this question as if you're buying a car. The published price list shows the price of the car at $20,000, but nearly all people that purchase cars expect to pay something less than the listed price. Applying this rationale to the item you're buying, you can answer the questions on this screen. For example purposes, I'm going to indicate that we have a recent invoice And that invoice was received from customer Acme Co. The invoice number is ABC123, and the date was 1/1/2016. To add a copy of this invoice, I simply click the Add Files button. The quantity on the invoice that the other customer had purchased was 25, and they did so at a price per unit of $550 per unit, and they were delivered in 2016. In this case, rebates are not customary, so I click the Rebates are not customary radio button. If I had clicked that rebates were customary, I would be prompted to input expected rebates. SpendLogic then asks if this expected rebate is included in the basis price entered above, or whether it needs to be applied after the fact. The last input requires an explanation of how the amount of expected rebate was determined. Remember, anytime a prompt ends with an ellipsis, SpendLogic wants you to simply complete the sentence. When you're done with this page, click Next. This screen corrects for differences in timing between historical and current procurements. The basic concept is that $1 yesterday doesn't buy the same amount of goods and services as $1 today. The first question asks whether you want to use separate indices for labor and material. If you have a breakdown of cost elements and therefore know what percent of the purchase each represents, choose Yes. Otherwise, choose No. Next, you're asked to choose an index. These indices are based on Bureau of Labor Statistics, which produces pricing indices by NAICS code, or NAICS code. By choosing the index that most closely relates to the NAICS code of the item you're buying, SpendLogic uses the information entered in previous screens to calculate an escalation factor. This is automatically applied in the analysis value in the upper left part of the screen. Click Next. This screen corrects for differences in quantity. You'll notice in the header that SpendLogic notes whether a price increase or decrease is expected. The basic logic is that if you're buying more items this time than last time, you should be receiving a discount. If fewer items are being purchased now, then a price increase would be expected. The first item asks whether an adjustment to price due to quantity differences is required. If you have some reason to believe that a price difference should not be required, choose No and explain it in the text box. Typically, an adjustment will be required and you'll be choosing Yes. After choosing Yes, a drop-down list is shown. I'll go through each of the items in this list now. The first option shows that the prior proposed price, which is what we entered as the basis price, included pricing for the current quantity. This is useful if the prior quote included the quantity that you wish to buy today. If that's the case, enter the price for this quantity from the prior quote. SpendLogic will calculate and apply a correction factor for you. The second option is appropriate if you have known prices for multiple quantities. By choosing this item, you're asked to provide an explanation of where the data is coming from. If you choose either of the last two items, similar or previous, you'll be asked to provide additional information. Continue down and enter the appropriate start and end units for the related price. For instance, if you know the price for quantity 2 through 5, quantity start would be 2, quantity end would be 5, and the known price for those quantities would be entered here. If you instead know pricing for individual quantities, then the numbers in start and end would be the same. For instance, if you know the quantity of 2, quantity start would be 2 and quantity end would be 2. You will need at least 3 points to make this function work. However, you can always add more. In fact, the more points you add, the more reliable your final calculations will be. I'll go ahead and fill in some information on this page now. Once you fill in the page, you'll see a graph. This is the regression that plots the proposed price along with the data points known. Take a minute to review your graph and make sure that it makes sense. SpendLogic runs multiple regressions in the background and recommends whichever one has the highest R-squared value. R-squared is a statistics term that refers to how well the data entered fits on a line on a graph and ranges from 0 to 100%. The higher the R-squared, the better your data is when graphed. Generally, you should look for an R-squared value to be 90% or higher. If you have a low R-squared value, it's recommended that you use a different method for quantity correction. The quantity correction factor is what SpendLogic is applying to translate the prior price paid to the current price based on quantity. This calculation is applied automatically and is reflected in the analysis price in the upper left-hand part of the screen. The third option is to apply standard DoD factors. This works similar to inputting multiple prices and quantities, but rather than use data to identify a curve, SpendLogic creates its own curve using a slope of 95%. If you choose this option, no further input is required. SpendLogic automatically makes the calculations and applies the result. The last option is one that is likely to be used fairly rarely. If you know the price correction that is required for the difference in quantity, you can input it directly here. SpendLogic will apply whatever value you input. If you apply something less than 100%, you'll see a decrease in price. If you apply something greater than 100%, you'll see an increase in price. Make sure to be complete when entering the rationale in the box below. Once you've completed this screen, click Next. This screen allows you to make adjustments to price based on differences in complexity or market conditions. If the item you're purchasing is the same as the item purchased previously, choose Identical and click Next. If you're purchasing an item that is similar to the previous purchase, choose Similar To. You're then presented with a number of inputs. First, SpendLogic asks what part number this item is similar to. If you're purchasing a part with the same part number, enter that here. If the prior purchase had a different part number, that prior part number is what should be entered. Next, briefly describe how the parts are similar. Often, auditors issue findings due to not feeling comfortable that the items claimed as similar truly are. Be sure to make a good case for yourself and explain why the two items should be considered comparable. Next, we're asked to show the differences. A best practice is to list each difference separately. Start with a short description of the difference, such as change in material from steel to aluminum. Next, provide the dollar per unit impact of the change described. This can sometimes be tricky and may require help from a technical focal. Enter a positive number for increases in price and a negative number for decreases. The next box is where you provide an explanation of the dollar value provided above. Explain how you came up with the adjustment and be as specific as possible. This is an area of high risk in audits. At the bottom, you're also provided an opportunity to upload supporting documentation. Include anything that helps support either the comparison of these items or the basis for differences in cost. If you used a technical evaluator, it's a good practice to include documentation of tech eval inputs here. Scrolling down to the bottom of the page, you see there's a box that shows total adjustments and adjustment as a percent of basis. Total adjustments is a sum of all of the values entered above. In this case, I had one adjustment and it was $50. Adjustment as a percent of basis divides the sum of the adjustments, $50, by the basis price per unit. This value is an indicator of the magnitude of the difference. If this number is greater than 20 to 25%, this may face additional scrutiny in an audit, so make sure the rationale entered on this page is strong. When you're done with this page, click Next. Now you get to our final summary screen. You can review the entries and download the price analysis report using this button, or review all of the entries that you've made below. When you're done, clicking Return to PO returns to the original screen that you started at. This concludes our video. Thanks for watching. If you have questions on this or any other feature in SpendLogic, you can visit spendlogic.com/help or email us at help@spendlogic.com. Be sure to check out our other video tutorials at spendlogic.com/help.